So thanks for, it's delightful to see so many people here. As Janine said, I'm a prof here normally. But I was on sabbatical last year, so that's why many of you wouldn't know me. And I'm not teaching this year because I am on a farewell tour. I'm retiring in June 30th. But who's counting the days? Looking forward to it immensely. Many things to do. Anyway, I guess in the theme of sort of retrospective, which is not actually really how I thought of doing this originally, in 1994, I wrote an article that I really was happy with, not happy with everything I write, and it was called Taxing Times for Lesbians and Gay Men, Equality at What Cost? Show and tell, that was it. And my focus in that was the demand by lesbians and gay men for inclusion as spouses under the income tax system. And I know this talk has got quite a bit of tax in it, but I promise to try and make it, for those of you who haven't done tax, reasonably understandable. But stop me if I'm saying something that doesn't make sense. And the first tax thing I'm going to tell you is that our income tax system, the individual is the unit of taxation. You pay tax as an individual. We don't have joint filing in Canada, as they do in some other countries. But there are over 400 references in the legislation to spouses. And those references then will treat spouses differently than they do individuals for a variety of tax measures. And that's sort of what I'm going to be talking about. I should also say that the definition of spouse in 1994 was married persons or persons of the opposite sex who lived together in a conjugal relationship for 1 year, at least 1 year. Now it is married persons and anybody else who lives in a conjugal relationship for at least 1 year. So I say that because many of you may actually be spouses for tax purposes without actually realizing it. Anyway, in 1994, I'm going to get you to cast your mind back there in a minute, but in 1994, my conclusion at that time was that while the demand for inclusion of lesbians and gay men as spouses for tax purposes was clearly an equality issue and could form part of an overall strategy, the consequences of doing that were not, as many seemed to believe at the time, all positive. And in fact, that the claim had profound class implications, with those with lower incomes paying more tax when treated as spouses than those with higher incomes. That those with higher incomes would pay less tax, those with lower incomes would pay more tax. And somehow, in the debates, this didn't always come to the surface. So what I want to do today is to revisit the issues that I raised in Taxing Times and my concerns about a strategy that argued for inclusion of same-sex couples as spouses for tax purposes. What have the consequences of the extension of the definition of spouse in the Income Tax Act been for lesbians and gay men? Are the class implications I raised still a cause for concern? And what changes have happened over the last 20 years in the tax system that affect lesbian and gay couples? And have they been positive changes? So I'm going to say cast your mind back 20 years, but now, of course, I immediately think most of you were 3 years old at the time, so very difficult to do. So I'll try and give you a little flavor, because I was no spring chicken then either, actually, as I'm no spring chicken now, but I wasn't then either. So I was a bit involved in all of this. And I should add, I was very much, as a lesbian, very involved in all the equality work that was going on. It was a really different picture then, and it's difficult, I think, to imagine at times. In Canada, in 1994, Ontario, with an NDP government, had just defeated a bill which would have redefined marital status in 56 pieces of legislation to remove the reference to opposite sex. In other words, to include lesbians and gay men as spouses for all of those purposes. Sexual orientation was not yet recognized as an analogous ground under the Charter. And various cases were brought forward by lesbians and gay men, including issues such as the right to marry, the right to sponsor one's partner for immigration purposes, the right to a spouse's allowance under the Old Age Security Act, the right to conjugal visits with one's same-sex partner in prison, the right to spousal coverage under Medicare, and every single one was a resounding defeat. So that was the scenario back then. Meanwhile, as I alluded to, the lesbian and gay activist movement was gaining traction, a lot of support, and two key cases were taken forward that I think were absolutely pivotal, two groundbreaking decisions. The first was a case where Michael Leshner, who worked for the federal government, he applied to have his employment pension plan changed from single coverage to a spousal plan to include his same-sex partner. And this may sound, of course, we have this now, but 20 years ago we didn't. The federal government refused. And there is a big tax connection here. Pension plans are heavily subsidized by the tax system. And what I mean by that is if you contribute to a workplace pension plan and your employer contributes, you will get a tax deduction with respect to that contribution, and that tax deduction means you'll pay less tax. In effect, you're getting a subsidy as a part of the contribution towards your pension plan. So what the federal government said was basically that they would not permit Leshner to name his same-sex partner in the plan, and same-sex partners could not get the same tax breaks. Went to the Ontario Human Rights Commission, and the Human Rights Commission found for Leshner and gave the government, federal government, 3 years to change the rules in the Income Tax Act so they would apply to same-sex couples for the purposes of pensions. But this was the Ontario Human Rights Commission. The second case was a case called Rosenberg, which had much broader application. It was a charter case. And two lesbian employees of CUPE, the union, argued that the refusal by the tax authorities, Revenue Canada, to accept a change to CUPE's pension plan to include same-sex couples as spouses discriminated against them under Section 15.1 of the Charter on the basis of their sexual orientation. Now, the federal government conceded quite happily there was discrimination, but they argued that the discrimination was justified under Section 1. The Ontario Court of Appeal held unanimously that no discrimination could be justified, and it ordered that the words same-sex be read into the definition of spouse in the Income Tax Act as it applied to pension plans, because that's what this was about, tax subsidies for pension plans. And to me, that was actually a watershed moment. There are other cases you probably learned about, Vriend and so on and so forth, charter challenges. But the federal government did not appeal this decision to the Supreme Court of Canada. It was the breakthrough. It was followed in 2000 by the Modernization of Benefits and Obligations Act, which changed the definition of spouse in 68 pieces of federal legislation, including the Income Tax Act, to include same-sex partners as spouses. And then, of course, we attained same-sex marriage. So it's kind of a success story, I would say. And I just want to problematize one part of it. So going back to my 1994 piece, I said in that that the tax system is not the place to start. This is in terms of equality claims. The problems are too intractable and the costs too high. So let me talk a bit about some of the problems and why I would say that. And I can tell you it was an extremely unpopular stance that I took. And I was always very careful because, as a lesbian, I'm totally supportive of equality for lesbians and gay men and same-sex couples and so on and so forth. But I would give talks with raising my critique of starting with the income tax system and raising my critique about why we would argue that the tax system sort of should be at the forefront of change. And didn't quite get booed, but got a lot of people saying that I was being disloyal and not supportive to the cause, which is actually, in my opinion, not true. So in brief, in that piece, here were some of the problems I saw. First of all, changing the definition would, and it did, result in a huge tax windfall for the government. We paid more in taxes overall. We didn't pay less. And I think people at the time, I kept making that point, but of course I had to say, projected, this would happen. I just think people kept thinking it was all about benefits. In fact, overall, and I think that's one reason that the federal government didn't appeal the Rosenberg case, they knew they were going to make an extra, and the figures vary, anywhere up to $100 million in taxes collected. The second problem I had with it is what I call the role the tax system plays in privatizing responsibility for economic security. So what do I mean about that? And I'm going to come back to this point, which gets, I try not to be complex, but it's got some complexities to it. Essentially, you are using the tax system to place the onus on family members, spouses, to support their partner who may have limited economic resources. The public sphere, the private sphere, the role of the state versus the role of the private market, or in this case, the private family. And where does the onus fall when you are thinking about the economic security of citizens in Canada? Obviously, we know that there's public support, there's private support. When you use the tax system, you are really privatizing that responsibility through certain measures I'm going to talk about, because that's what many of the, quote, benefits under the tax system are about. My third concern at the time, and it's still a huge concern, is that including lesbians and gay men as spouses would and did result in a certain push towards a return to the traditional family, one in which one of the spouses is the breadwinner and the other remains at home performing domestic duties, domestic chores. And this, in turn, in the context of lesbian and gay relationships, I believed would result in a certain domestication of those relationships. And to the extent that lesbians and gay men, certainly back then, and I think now, see would say that they have that they problematize certain things and so on and so forth. I think this push towards a domestication through the tax system was very troubling. So I'm just talking very briefly there. I'll come back to those points. My main concern, though, focused on the class implications, which I've alluded to. So what I did in that piece was I looked at 3 different couples. I took a couple in which both spouses had high incomes, looked at the impact of the change on them. I took a couple in which both spouses had low incomes, looked at the impact of the change on them, and I took a couple where one had a high income and one had little or no income, and looked at that change. So the couple with high incomes, obviously high-rate taxpayers, the couple with low incomes, low-rate taxpayers, and the couple in which one spouse had a high income would pay significant tax, the other spouse with no income or little income would not pay tax. And my conclusion was that the couple in which both spouses had low incomes and therefore were low-rate taxpayers would actually pay more tax when taxed as spouses. And the main reason for that was that income is aggregated for certain purposes with respect to some tax credits. So let me make that much simpler by giving you an example. But the key point here is that you had a lesbian couple where each partner, say, earned, I'm just pulling this out there, say $30,000 each. Their incomes were relatively equal. They were quite low. That couple would pay more tax as a result of this change, and did pay more tax. And in fact, I should say that the figure that's been put on this result with respect to that particular couple and 2 particular tax credits, which I'm going to talk about briefly, is that the windfall for the government in this regard was up between $37 and $42 million. So let me use the example you may be familiar with, the GST tax credit. We have the GST, as you know, is a flat rate tax, and the government takes the position that because when you pay the GST, low-income people are paying a higher percentage of their overall income as the tax. If I go out and buy something for $100 and I pay my 6% tax or 5% tax rather on that, if I have a high income, that's that amount of that tax is nothing. If I've got a low income, it's a greater proportion of my income that I'm paying as that tax. So what the government does is they give you a tax credit, and some of you may receive it every 3 months, which is to represent the fact that we know that you're paying a disproportionate share of the GST in relation to your income level. So that GST tax credit is, as your income goes up, your entitlement to it diminishes and then disappears. So what happens, though, is that if you have spouses, their incomes for determining the threshold at which it diminishes and disappears is aggregated. So you would have a couple in which each person, for example, was earning $25,000. Each would receive the full GST credit. As soon as they got together, their income was considered to be $50,000, and they lost the credit. So that's where a lot of that windfall came from. So that's the couple that would lose out. Meanwhile, two high-income earners would benefit significantly from this change if they had significant wealth and capital assets. And the main reason for that, and again, not to get too technical, is that spouses are permitted to transfer what we call capital property assets to each other on a tax-free basis. So, for example, if I die and I leave you my diamond necklace that I paid $100 for, but it's worth $1 million, if I leave it to you, tax is paid on that capital gain of whatever it is, the difference between what I've said you paid for it and the difference in its value. Tax is paid on that. But if you happen to be my spouse, there is no tax until you dispose of it. And that is a huge deferral of tax, right? And just a little advice to all of you. One of the things you love to do is defer taxes, because you don't want to pay taxes now. You want to put them off as long as you can, because if you put them off as long as you can, you've had the money that would be that tax bill to earn more income, and also to the extent the dollar devalues, you're paying with cheaper dollars. That's just a tax tip for you. But anyway, so going back to that, so if you think about it, you've got a stock portfolio, you've got a diamond necklace, you've got a second house, you've got a racing car, I don't know what you have. That the ability to defer that tax for high-income spouses is phenomenal. And then the couple in which one had a high income and one had a low income depended. They certainly were eligible for what we call the Spousal Tax Credit, which would reduce their tax bill, in effect give them a tax subsidy. And so that is a benefit. There were some other negatives, but that benefit, the Spousal Tax Credit, and I've written about this one a lot, but I'm not going to say too much today, but it really emphasizes my privatization point, because what the Spousal Tax Credit is you and I are spouses, and I'm a university prof earning a fortune, but I have a significant income. You have no income. I will get approximately $1,000 back with respect to the tax credit, the theory being that I'm financially supporting you and I should get some help from the state to do that. But the problem with that is that if you think about it, yes, there is a tax subsidy, and yes, I get something to sort of take into account that I'm supporting you, but the tax credit isn't actually going to the person who needs it. It's not going to you, right? It's going to me, the economically dominant person in the relationship. And so then that leads you to think there's a certain assumption there that income is pooled and shared, which isn't always the case. But there's also, for you, a certain disincentive to participate in the paid labor force, because we will lose this credit when you go out to work and earn more than, actually, I forget the exact figure, it's something like $6,000. And what I mean by privatization there is that the state is essentially saying, you will get this subsidy because you are in a relationship with somebody with a high income. It's not saying to you, we think that your economic dependence on somebody else or your economic inequality should be redressed in some way, so we'll give you something for it. It's doing it through the private family. So find yourself a spouse. A little bit harsh, but... so anyway, that's the Spousal Tax Credit. And again, my point about traditional family, to a certain extent, along with other expenses you would have to go out to work, you'd have perhaps childcare, you would decide you needed to dress reasonably respectably to participate in the paid labor force, and you would lose your spousal tax credit. There's a certain, I won't say drive, but a certain persuasion to retain the traditional family, where you stay at home, work in the house, and look after the kids. Anyway, just to go back to my original point, though, the result of all of this was the tax burden was being borne by those who could least afford it, those with low incomes. I also raised a couple of other issues, and I'm not going to spend too much time on these, and this may seem now not as important as it did then, but I think it does in a way. First of all, when you are spouses, when you live in a conjugal relationship for 1 year, you have no choice about whether you declare yourself on your income tax returns as spouse. You legally have to do it, and if you don't, you can go to jail. So think back, 2000, when this change did get made. You know, things were a little different. I still think it's problematic. So you'd be out to CRA, to the authorities. You might not be out to your family. You'd have to be out to your employer if you wanted to get the pension breaks. So these changes meant that you actually would have to be out. And if you weren't out to CRA, you were breaking the law and you go to jail. And I did a lot of talks in the sort of lesbian gay community at that time. People would say, well, I'm just not going to tell them. And they'd have various reasons, including none of their damn business. I don't consider you my spouse, even though I'm living with someone in a conjugal relationship. I've got a different vision of what my life is, and I'm a gay man, and I don't recognize the fact that the state determines that my relationship is relevant for this purpose or whatever. But as I say, you had to be out, even though you might not be to your family or and so on. You must be out to your employer and CRA. There were also gender implications, and I've written about this elsewhere, which meant that lesbians were less likely to benefit from inclusion as spouses than gay men, primarily because of their lower incomes. And we know women tend, and I always use the word tend, to earn less than men, and the figure has sort of wafted around, 75 cents on the dollar, up to 79, up to 86 at one point. It's now dropped back down again, and that is the figure for full-time work. So to the extent that women earn less than men, they are less able to benefit from the benefits that go to the high-income earners, I mentioned earlier, and they're much more likely to be captured in the group that pays more tax because of the loss of the GST tax credit, and also, I didn't mention it, but the child tax credit is treated the same way. Okay, finally, 20 years on, well, actually 19 and a bit, but we'll say 20. Where are we? Well, I would argue that all these problems still exist, and in fact, they've been exacerbated by some recent changes and a proposed change to the tax system. I argue that, in fact, the trend is moving further towards rewarding the traditional family, the one in which, as I said earlier, there is the breadwinner, stay-at-home spouse, and that the privatization of economic security for a dependent spouse not only continues, but is being reinforced significantly by the measures I'm about to talk about. So first of all, I just have to do a tiny bit of tax theory, so just bear with me. You can just put your fingers in your ears if it's too boring, but because I think it won't make sense what I'm saying unless I explain this. And if you want the technical term, it's called tax expenditure analysis. But let me just put it this way. Anytime you give a tax break, and it could be a tax credit, where you get a credit towards your taxes payable. It could be the ability to defer tax. It could be a deduction, like the Childcare deduction. It could be an exemption from tax. Anytime you have one of those, it actually is part of the government spending program. They're not collecting taxes and then putting them back. They're just not collecting them in the first place. But it is the equivalent of a subsidy. It's like a functional equivalent of a direct grant. I'll give you an example. The childcare expense deduction. So we give parents a deduction that reduces their income, which means they'll pay less tax if they have kids in childcare. But think back, okay, what's the policy? The policy is to subsidize childcare. So the government could, instead of using the tax system, which I have argued and will argue till the day I retire and beyond, is the most unwieldy tool to use for certain of these social and economic objectives. But, the government has a choice. It could give you a tax break, or it could say, we're going to build more daycare centers. We're going to do what Quebec did. We're going to subsidize directly daycare. We're going to give every mother a check once a month to cover off daycare. But they chose to do it through the tax system. And so when I talk about some of these tax subsidies, they are, in fact, just like a grant. It's just that you pay less tax. So if you think about it, if I would pay $1,000 in tax, but the deduction means I only pay $800, I got a $200 subsidy towards whatever it is. And once you think about every tax break there is in that manner, you will immediately, I think, see the power of the tax system in terms of social, economic, it's just a social, economic, and political tool. And that's the way it's used, and that's not a negative, but once you realize that, it's much easier, I think, to stand back and critique some of these provisions. So let me move to the two rules that I just want to mention today that I think have added to the problems that we have. One is that spouses, and this may sound a bit esoteric to you guys because you're so young, but spouses are now able to split pension income. I'm going to come back to what that means. And the Conservative government has proposed, once the deficit has been erased, that couples, spouses, will be able to split up to $50,000 of income from any source. And these are spouses who have at least one child under the age of 18. Now, it sounds like that sounds a bit meaningless, so try and let me explain what income splitting really means. As you know, I'm sure, well, if you've taken tax, you know, we have what we call progressive rates of tax in Canada. So if your income is low, you pay, let's put it this way. We have 4 rates, federal rates of taxation. As my income goes up, I will hit a new tax bracket, and I will pay tax at a higher rate. So if I'm a high-income earner, I'll be paying tax at the same rate a low-income earner is, up to whatever the figure is. But then because my income goes beyond that, the amount beyond that will have the higher rate applied to it. And there are 4 of these tax brackets. So I just want to be clear, it's not all my income that's taxed at the high rate. It's only the amount that goes above the threshold when the high rate kicks in, or the higher rate kicks in. So if I, as a high-income earner, I'm sorry to always make you the low-income earners, or you have no income, if I, as the high-income earner, can actually shift some income out of my income to somebody else's who pays tax at a low rate, hey, we've saved some money. Now, I hate to break it to you, but I'm not going to do it with you, but I might do it with a spouse. I might do it with a kid, right? So this is income splitting. This is, tax law is all about avoiding tax. Avoiding is quite legitimate, but that's what tax lawyers do. If you want to be a tax lawyer, you better get used to what you're doing is basically saving your clients money in all kinds of ways. Now, the point about income splitting, though, as I say, is that it tends to, of course, happen. You're only going to income split, give money away to somebody you actually trust, I suppose, and so on. So the pension income splitting rules, what they allow to happen is if I have a pension, I can split that 50-50 with my spouse. Now, again, you have to think about who's going to benefit from that. If my spouse has the same income as I do, nobody's going to benefit. It's not going to help us at all. It's only going to be of significant benefit where my spouse has no income and I have the pension income. Because then I can split 50-50, which means my spouse is paying tax. Let's say the pension is $40,000, or I'll make it $80,000. So the tax that I would pay on that with the graduated rates, the progressive rates, would be significantly more than somebody who just has the $40,000, who I give it to because they won't hit these higher tax rates. The difference between the 2 tax bills is our tax saving. And so I argue, though, that these rules have a particularly negative impact on those who are economically dependent on their spouses, because in this example, where I income split with you, you are liable for the tax on the $40,000 I give you, not me. It is allocated, the tax bill is allocated to you. However, there is no requirement that I give you the money. Absolutely, it's a fictional split. Okay? There's no requirement. You may not have control or ownership over it at all, but you will pay the tax on it. And of course, you have to depend on me sharing income with you in retirement. And as we know, full pooling and sharing of income wealth is not always the case. In fact, studies are coming out more and more that show that in spousal relationships there is actually less sharing than there was in the past. And again, this is a very private response to your economic needs. You are looking to me to share a tax break with you. So that's the pension income splitting. And again, I just have to emphasize it's only going to help the couple where one has significant income, first of all a pension, and significant income, and the other has little or no income. So now the new federal proposal to permit income splitting for families, spouses with children under 18. And I just, again, if you work in the tax world, you would know that this is the most unusual proposal. There is no other country that I'm aware of other than France that permits full income splitting of income within the spousal relationship. Even in the US, they only permit you to split 80%, 20% if you file jointly. And so that means that you can't get the 50-50 is what you're really looking for, because you can shift so much more income to that low-income spouse. And in Canada, to date, we've always had rules that actually stop income splitting within relationships. They're called the attribution rules. I won't even talk about them because I'd have you all asleep in 5 minutes. But so I think in the tax world, certainly, I think it's fair to say that this one has come as a complete surprise. Jeffrey Simpson wrote about it in the Globe and Mail just the other day, saying he thinks it's on the way in because the budget will be, the deficit will be erased quite quickly. So let me tell you a bit about this form of income splitting. Again, it is the ability of spouses to split up to $50,000 worth of income within the relationship. So the rationale for it is this. We call it horizontal equity, but it began, don't worry, here's the rationale. Couples with the same aggregate income should pay the same amount of tax, regardless of how that income is earned in the relationship. So, couple A, both spouses earn $50,000. Their aggregate income is $100,000. Couple B, one earns $100,000, the other nothing. The argument is that those two couples should pay the same amount of tax because they each, within the relationship, have $100,000. The argument is that they have the same aggregate incomes and therefore the same level of well-being. So they should pay the same amount of tax. But because of the progressive tax rates that I mentioned earlier, couple B will pay more because $100,000 with one taxpayer is going to be taxed overall. There's more tax payable on that than there is on two people with $50,000 incomes because you don't get to those higher tax rates. So I'm just going to give you what I think are some flaws with this argument. First of all, we're talking here about income taxes. We're not factoring in what we call payroll taxes. Now, when you get a paycheck, you have your income tax taken off it, but you also have your EI, your CPP payments. Those are what we call payroll taxes. When you factor in that actually couple B has two sets of these payroll taxes and so on, you can make the argument that actually the two couples are not that different, or differently situated at all. But the main problem, and this is a point that's been made by various feminists in the past, and I think it's a really important one, is that this economic theory of horizontal equity, that you look to the same level of well-being by focusing on the economic well-being, that actually looking at income as the sole measure of well-being is not the best way to do it. Saying couple B is less well off because they have a higher tax bill and therefore less money left over is actually not correct. In fact, couple B may be as well off, couple A over here, couple B over here may be as well off, if not better off than this couple, if you look more broadly at other factors, and of course particularly the services performed by the stay-at-home spouse. So in this relationship you have someone who's not participating in the paid labor force who presumably is raising the kids, performing household chores, and so on. Once you take that into account, the picture looks a bit different because couple B, couple A have to either forego leisure time or pay for those services. Sorry, did I say couple? I meant this couple over here, A. Has to either pay for the service. So again, okay, so we're saying that this couple where one person is $100,000 and the other is nothing is actually worse off than this couple. In fact, the argument is that this couple, their stay-at-home spouse is performing various chores around the house and so on and so forth. These are chores that this couple, because they both participate in the paid labor force, have to either contract out for, do them in their late at night, pay for them, give up leisure time, and so on. So in fact, the couples aren't that different when you look at it. There's some other concerns too, and one is that if you look at the couple here, where you've got the high income earner and the low income earner, or no income, this proposal has a really negative impact on the autonomy of the stay-at-home spouse, the spouse with little or no income. Again, it's the same point as before. This split is fictional. There is no money being handed over. There's no requirement that money ever be transferred. The other problem for the stay-at-home spouse is that their marginal effective tax rate goes from 0 to something higher, because they are now liable for the tax on the amount that has been attributed to them that they may or may not have received. The consequence is, in my view, that measures such as these, rewarding this couple by giving them a significant tax break, is a reinforcement of the traditional family in which one spouse controls the finances and the other is dependent on that spouse for their economic security. And for lesbians and gay men, I think this provision has the effect of encouraging heteronormativity. Despite the fact you're in a same-sex relationship, the tax system is pushing you towards adopting behaviors that mimic heterosexual couples, with a highly gendered division of labor, a traditional view about how finances should be handled, and so on. And certainly if you talk to many in the lesbian and gay community, they would see themselves as actually being very different in the way they live their lives than heterosexual couples. To the extent that including lesbians and gay men as spouses may have had or may have in the future a radicalizing impact on notions of what is family, to me, this kind of proposal completely nullifies that. And I guess the final, or one of the final points on income splitting is that it's what we call regressive. It favors those with higher incomes over those with lower incomes. If, I'm earning $30,000 and my spouse is earning nothing, there's going to be no tax benefit. It's only the benefit will come provided the spouse who's earning the significant income is earning at least $60,000 or more. More than $1 billion of the annual subsidy that's estimated to come for this, and the value of this subsidy has been estimated at $4 billion. So think about that. This is a spending program. The government's saying we will spend $4 billion through a tax break for couples with kids where one spouse stays in the home. That's effectively what it is. More than $1 billion of that $4 billion will go to 8% of families in the top income quartile. It's what we call an upside-down subsidy. The tax subsidy is going to the couple that actually probably needs at least the couple with the highest income. So the other final point I want to make is to take advantage of this, you have to have kids under 18. If nothing else tells you this is about rewarding the traditional family, I just think this does, because you've got to have kids, so the implication is the stay-at-home spouse is going to look after the kids in the house, in the home. So one spouse will stay at home, take care of the kids, while the other is out earning income. Seems to me like it's coming from the, 19th century, make that 18th. And, it's kind of odd, because if you think from a tax perspective, you could say, well, look, they've got kids. We should direct some tax subsidies towards people with kids because we think this is a good idea. We do. We've got the Childcare expense deduction. We've got the child tax benefit. We've got the child tax credit. We've now, from the Conservative government, got the child fitness credit. And if your kid is not sporty but is arty, we have the child arts credit. So, but backing off again, who's left out? single-parent families, right? I mean, you have to think of this as a pool of money being spent in a particular way. And we can all debate about, politics and how it should be spent, and you may totally disagree with me, but at least you need to be able to justify a $4 billion expenditure in some, concrete way. And my argument would be, I actually think single-parent families who tend to be living close to the poverty line in many instances, and of course, as we all know, significant number of them, in fact, significant majority of them headed by women, perhaps they could do with some of that $4 billion. So, and the final point is, I will stop in a second. As with other tax measures, this is actually quite gendered. Gay male couples are much more likely to be in the top income quartile than lesbian couples. Okay, to conclude, so what do we do? Okay, time for a change. In 2000, the Law Commission of Canada, the late Law Commission, because it got disbanded by Stephen Harper, well, I won't mention that, but you want to read something really good, folks, whether you're interested in tax law, family law, social, welfare law, or anything like that. Beyond Conjugality, it's a report put out by the Law Commission of Canada, and what they were doing was looking at whether we should take relationships into account at all for a variety of purposes. They looked at the tax system, but they looked at many other pieces of legislation. And their question was, are the objectives of the legislation, whatever it is, legitimate? And if so, are relationships relevant to achieving them? And I think that is a fantastic question. So I think there's three ways to go, and I'm going to just sum it up. You could say, okay, we don't like the conjugality stuff. We don't like the spouses stuff, right? And by the way, someone asked me the other day what conjugality, what that means. No, it doesn't mean having sex. It means marriage-like relationship, which I think, again, thinking about the lesbian gay community is quite interesting. So what you could do is you could say, okay, we'll keep all these rules, but it won't be conjugality. It'll be a different thing. How about economic interdependence? If you have an economically interdependent couple, then we will have various benefits, rights, and responsibilities accrue to that. You could change the tax rules so they work better. Or you could do my personal fave, maintain the integrity of the individual as a unit and get rid of all the rules that take spousal status into account. On the economic interdependence, my point there is simply, I think that just broadens the problem of privatization. You're simply broadening the group that you would give the tax break to that looks to economic interdependence, and that, of course, involves dependence as well. And I've had some technical stuff, which I won't go into there. Also, how do you define economic independence? And if it is if it's by self-identification, gosh, do you want the tax system to be driving how you, whether you choose to claim economic interdependence? Second alternative is to take each little tax rule and fix it up. No can do. I mean, it's complicated. So you could say with the GST tax credit, we'll remove this requirement for aggregation of income. So we'll take out the reference to spouses having to aggregate their income. That will solve the problem. Yeah, you can do that, but what you do when you do that, and that was recommended by the Law Commission, is you're missing a vital point, which is our tax system does not operate in a vacuum. It is part of the whole social, economic, and political fabric of our country. And right now, you would know this more than I do, we aggregate income for many purposes, including student loans, social assistance, and so on. So how could you hive this one off and treat it differently? So let's just repeal all the provisions that take spousal status into account, return to the individual as a tax unit, take whatever money is being delivered as a subsidy, look at the purpose of the particular tax rule and figure out a better way to do it. Because my argument would be the tax system is the most unwieldy tool by which to deliver sophisticated social and economic problems. And what we've done is just exacerbate the problem with the inclusion of lesbians and gay men as spouses and with the changes since then. Done. Thank you. So happy to take questions, comments. You can, tell me it's all a pile of junk. I'd love to hear what you have to say.
Great. Questions? And I take it they don't need to be holding a mic. No, their questions are being captured. Great. Okay.
Don't get nervous just because it's tax. I'll let you think. No, I know I put a lot out there, but be really interested. Oh, good. I'm going to start. You on the back row there with the glasses. Sorry, I'm sorry, I don't think any.
Does your proposal have any traction? Is there any hope that this will happen?
Thank you. I'd love to think so. You know what? It is interesting because, again, and I don't want to sort of get into party politics here, but Canada is going in a direction that is so different than other jurisdictions. So, for example, Australia is moving away from looking at spouses for tax purposes, right? It's moving away. The UK as well, to a certain extent, has done that. So I would like to think so if you look at the broader international picture, right? But, you know, at the end of the day, if you believe strongly in a traditional family, and I've used that word, you know what I mean by that, and reinforcing that, then this is a fabulous way to do it, right? And so, you know, I would like to think that if we got a government that wasn't quite so conservative as the current one, things might be different. But I do have to say, and this is interesting, the Green Party has come out in favor of income splitting, which has somewhat surprised me. I think there's always hope. Certainly, I'll tell you that there is certainly there's appetite for change among certain groups or activist groups and so on. And the trick is to get over the technical tax hurdles and make it accessible. I think the more people think about these issues, then the more groundswell there will be around them, and the less fear that, oh, it's tax, we don't understand that, or anything silly like that, right? Because it's just another program, social and economic program, right? So I'd like to think there is hope, of course. I wouldn't be doing this if I didn't. Yes?
I'm wondering how relationship breakdown factors into all of these scenarios.
Yeah.
So, for instance, a scenario where one spouse earns $100,000, the other spouse stays at home, takes care of the children, and earns no income, and is out of the workforce for, say, 15, 18 years. When that relationship breaks down, I mean, the government has been encouraging people to live in those types of relationships where there's a sole income earner. In the breakdown of a relationship, I feel like that isn't in the interest of the government to then have this person who's been staying at home for 15 years to then, once again, sort of suddenly be forced to be back in the labor force.
I'm not a family lawyer. I'm looking over at Susan Boyd and putting her on the spot because she is like what I would say from tax perspective is it's a bright line. You're either in a relationship or you're not. And when it breaks down, there are a few tax rules that allow property within that relationship, when it's divided up, to be divided up without tax consequences. There might otherwise be tax consequences, pulling money out, or I won't even go into it, it'll be too technical. But there could be tax consequences, a breakdown of a relationship when money and goods and so on are going back and forth, right? The tax system takes care of that by saying there will not be tax consequences. But in terms of the relationship between family law and tax law in this area.
So do you agree, to some extent, in a long relationship, like you're describing, of dependency of one spouse, to some extent that is likely to be taken into account in our spousal support law, particularly now that we have something called the Spousal Support Advisory Guidelines, because in part they look to longevity of relationship and differential of income between the two spouses. On the other hand, there are other trends in spousal support law, probably also property division law, that encourage self-sufficiency of each spouse, and I would say for some previously dependent spouses, there's a big push to get out there, make your own way, and you might not necessarily, get assistance from your ex forever. So it's kind of complicated, but I think your general point is very apt that all of a sudden, when the relationship is over, there's a change in how certainly the tax system works.
And in those strictly speaking tax sort of scenarios, like for instance, GST credit or student loan, if they aggregate your income to determine your eligibility for student loan, and then your relationship breaks down, then what happens to...
Well, then you are an individual. You're back to being an individual. And that's what I mean by the bright line. It happens, I forget the exact definition of the breakdown of a relationship, but obviously it's divorce or irretrievable, whatever, and the Income Tax Act will say that you are now individuals, essentially, not spouses, so you're back to where you were. Yes?
Just to clarify, I don't know very much about tax.
You don't have to.
So, in the tax system treating everyone like an individual, even if they are in a relationship and they are being supported by their spouse, I'm just curious, because it does seem that someone who's being supported by their spouse would be in a better situation than someone who actually does have a very low income and is not being supported by a spouse. I'm curious how treating everyone like an individual would take that.
Well, what I'm saying is you take the money that's currently being directed through things like the Spousal Tax Credit and you redirect it in a way that goes to the person who needs it. I mean, that's my broader point. Now, what I'm saying here is actually, again, I mean, I'm not a very popular person often. And I was making this point, actually, of all places, of Australia, and people took me on it and said, well, look, we know that $1,000 credit, it's there, it's delivered, and, oh, don't tell me, of course, and I'm going to be gendered here, because it's gendered here, because 98% of people who receive the spousal tax credit are men in respect of their female partners who do not work outside the home. Well, come on, of course they share it, they benefit, it's the easiest way to do it. And the biggest argument made for using the tax system is actually efficiency, because we know who you are already. You have to file a tax return. You want the GST tax credit? There's a reason that is not a direct grant. There's a reason that's a tax credit, because they want you to have to file a return so they have the records on you. The flip side is they already have the records. It makes it easier to administer, right? My line would be that actually it may be easier to administer, but it's missing the target in the case of the spousal tax credit. The money is actually, it should, in the interests of women's autonomy, be going to, and I'm being gendered, of course, to the woman who's staying at home in that instance, rather than doing it in this more roundabout mechanism. I also think that because these, what we call expenditures, are buried in the tax system, they go almost uncritiqued. Because people say, oh, well, it's the childcare expense deduction. Like, it's kind of like, well, that's great. You get some support, you get a tax subsidy if you've got a kid in daycare. But it's buried in the Income Tax Act, and people don't know, number one, it has to be the lower income earner who claims it, which means it's worth less to you. Number two, it's limited in application. Number three, you have to wait till the end of the year to get it, because it only comes back to you. It reduces your level of income, and it will be effectively, if you get a tax refund or whatever. I mean, it's all of those things. It's a social program. Why are we doing it through the tax system? So what I would say to you when you all take tax, which I know you will, is that you need to start thinking about tax measures as less as a technical device and more as what's the objective of it, what's its social or economic underpinnings, what's this about, and then is this the best way to do it? And I guess I would say often it's untargeted. When you give it to this in the spousal relationship, you're just plopping it in there. It's actually not going to the person who it really should be going to. So, but I do know it's very controversial to suggest abolishing recognition of spouses for tax purposes. The government would hate it. Any government, I think.
I have a question. Anybody else? Is there somebody else?
Bruce. Okay, Bruce.
Oh, I bring it on. Go, Bruce.
I have a question about if you're allowed to allocate
Yes.
to a certain amount. I don't understand why you wouldn't allocate to the total amount.
You do.
So if you're doing 50-50, you have to go to the 50%?
No, you can't. Okay, you don't have to. No, you can choose how much you allocate.
But why
So
would you
take
choose
the
anything
pension.
except?
Yeah.
I came in late, sorry.
That's okay, no. So if you take the pension income stream, right, you can allocate up to 50% to your spouse. There may be some instances when you actually don't need to allocate 50%, because 30% gets you the tax result you want. But of course you would use it to the max.
So is there any argument for saying you're going individual only, or you're going couples? But is there any argument for saying that if you are couples, that there should be a tax regime to treating you as one unit?
Well, if you do that, you're going whole hog, right? I mean, you've got three choices. Individual, hybrid system, which is what we have, recognized spouse for some purposes, most of which are to deliver a subsidy to a particular group with a particular aim in mind, or do what they do in France, which is just say, right, you are spouses for all tax purposes. Some problems there. That, of course, means that as spouses, the first problem you have then is what they call in the States particularly, the marriage tax. You and I are spouses, we each have an income of $50,000. If we're taxed individually, we're going to pay at, say, an average rate of 20% each. If we're spouses, we're going to be taxed on $100,000. That's the marriage penalty. We'll be taxed, say, at 35%. That's the problem there, right? But it is, it has, as I say, France is great, because what France does, and I don't mean to get in a role here, but I kind of think it's so cute. They have a point for each spouse. So if you and I are spouses and we have 3 little ones, the more I think about this, the more I'm laughing. We get 1 point for you, 1 point for me, half a point for the little nippers each. So we've got 1.5 plus 2 is 3.5, and we divide our income by 3.5. And we come out with the amount that will be taxed. That's how they got away from the marriage penalty. But this, I think, actually, if you look behind that, I think the fact you give half a point for each little kitty is also quite beneficial. Like you might have a few kids to kind of lower your tax rate. But that's just an example of how you do so many things with the tax system. Yes?
So with the income splitting proposal, is the government proposing to remove any of the others? So there will still be the child care benefit. So all of a sudden you actually get, it enhances the effect of all of those other benefits that already exist. And so I'm going to now forever think of this as the Real Housewives rule. So the Real Housewife who is employing the full-time nanny as well will also then suddenly become the lower income earning spouse and get the child and get the
The nanny and the driver can
You can think of many scenarios, folks. And really what I'm just trying to do today, I know I've covered a lot of material, is just to try and get you to think beyond technical tax and just see it operating in reality in what is a very complex economic and particularly social climate. I say ban every tax expenditure that has got a social purpose behind it. You want to support something economically, provide social assistance. You want to provide for daycare, do what they do in Quebec, or set up some more childcare centres. Stop dumping it into the limited family, because as I alluded to earlier, I think single mothers are just particularly hard hit by all of this. Because, to the extent it's 4 billion into this income splitting, what could you do with $4 billion for single mothers with kids, right? So you've got to think of it as a spending program. It's part of the government's program. I'm not picking on the government particularly. I'm just saying that when I think about it, I don't put stay-at-home wives as top of my list of people who need financial assistance. Certainly not 4 billion. Sorry, I've silenced everybody. Yes, please.
Question about, I'm just thinking about your broader argument that by structuring the tax system in this way, particularly with the new income splitting proposals, that you're incentivizing the creation of relationships in which one partner stays home. Because they'll say, well, now it's not even worth it to go to work, or it's such a benefit, it's so much easier to stay home. And I think that's reinforced among heterosexual couples by a constant discourse that privileges that as the kind of thing that women would do if they could, right? You hear women say all the time, well, it'd be great if I could stay home, but I have to work, right? It'd be super if I didn't have to work so many hours, but we can't afford that. So that's sort of considered to be like the holy grail, but it's one that, fine, we recognize that most families can't afford. But I'm not so sure. I don't know. I don't know whether the same effects happen with same-sex couples. Do you think there'll be a push? If this all happens, and now we're income splitting our income and we're income splitting our pensions, for more same-sex couples to structure themselves that way, especially now that we have same-sex marriage and more same-sex couples with kids, or is that going to actually be resistant to?
First of all, I just want to be careful because, the cause and effect. I'm quite careful how I word it. I'm not saying that millions of women who have wealthy husbands are going to leave the labor force and go stay home. That would be, you've talked about incentivizing it. Yeah. I think what it's doing, I look at it slightly differently. I think there's an added burden to the women who work outside the home. So it's not like I sit at home and I say, God, I just can't afford to. Well, I would say, well, the job's not worth it. It pays me $10,000. I'm not doing it because actually I lose the spousal tax credit, you lose it, but you've got lots of money, it's just not worth it. But I think you have to be really careful. It's not just that, it's other things added in that you would say make it more expensive, more burdensome for people to move out of the home and work and so on, such as the cost of childcare, such as retraining, going back to work after the birth of a kid and so on. On the issue of lesbian and gay couples versus heterosexual couples, I actually don't think there'd be much difference, right? Because, and particularly, with, as they call it, the baby boom and all of that, I think, I don't see the pressures would be much different. But it leads to my point about, it makes me nervous that we are actually in some ways de-radicalizing the lesbian and gay movement a bit, because it's a push towards a more normal heterosexual life. And maybe I'm just old-fashioned from the days when, I probably am. Who knows? Yeah. Anyway.
Okay. How is the feminist status determined for tax purposes when it changes halfway through the year? Is it prorated?
When it changes halfway through the year, you mean if a couple splits up halfway through the year? Yeah. No, it's what's happening on December 31st. So if you're not, it doesn't matter when you split up, right, in the year. You don't get it for the year if you're not together on December 31st. Sorry?
Yeah, we're
full of it used to be the other way around. It used to be that, for example, you would get the spousal tax credit from the date you married for the full year. So people would get married on December 31st and not get married before then. Well, it still is. December 31st. The incentive to have that as your wedding day. Just kidding. If you've got a spouse who's not working outside the home. You get it for the whole year.
A question for family lawyer here. But for the not married people who are considered common law because they live together, do they cease to be common law as soon as they stop living together?
Yeah, it's basically the date of separation, and sometimes there'll be a factual disagreement as between the spouses about when exactly that date of separation was, but that's the reason